First of all, thanks to the BVCA for having me. We're also pleased to be the Mid-Cap Management Team of the Year winners most recently. And we're really hopeful to win the London Award nationally. I live in London, so it's a point of pride there. I want to be multi-regional. But BVCA is highly respected, and we'd love to snag that award. So whatever you can do, Tim, I appreciate it. I used to think that it was much better to sit on a panel because you didn't have to prepare at all, but those guys were pretty clued in. I have been I've never said this before, but the benefactor of 4 private equity investors throughout the course of our business, which started in 2009 with a pilot project. I came to the UK in February 2009 to look for an opportunity to unload some surplus power plant, and in doing so, found an opportunity to invest in reserve flexible power here in the UK. So I did a whole lot of work over about a 2-month stretch, and eventually Fortress Investment Group in New York, they dug in the change drawer for a pilot project, and so yeah, within that 2-month period, they blessed us going forth and investing in a plant. And then we partnered with Barclays Capital, and they said it's not enough to fly back and forth between Colorado and the UK, so we're going to make this a proper business. Are you in or are you out? I said I'm in for 2 years, and so 6 years later, here I am. And we had a successful exit in October 2015, November 2015 actually, with when the business was at a certain size, 185 megawatts of 14 power plants. The business case then was, we're fantastic at this. Now we have an opportunity for prescriptive growth through what the UK calls capacity market auctions, where you get 15-year deals. Previous to that, our longest contract was about 3 months long. And so we went out and we got a whole load of these 15-year deals. We went to market and said we have this fantastic platform, and it's a buy and build opportunity. So let's triple the size of the business, 4 times, quadruple, quintuple EBITDA. Who's interested? And we got a lot of interested parties. And fortunately for me, having 2 private equity investors, which introduces all kinds of complexities and headbanging opportunities, I was able to find another pair who wanted to invest in the business moving forward. Lessons learned there: try to stick to one investor. I think it's hard enough to get 1 on board, and then to get 2 on board, you tend to get the worst of them both, which thankfully is pretty good. But the lessons learned for me, it's good to hear a panel like that of venture capitalists and private equity investors, because as an entrepreneur, as a co-founder, as a CEO of a business, for me, whenever I hear my investors speak to me about things like trusting the management team, investing in the business, et cetera, to me, I tune out. It's PE babble. And but to hear these guys talk about it, there seemed to be some sincerity and some genuine comments there. And my experience is, I've been through the chairman model. My co-founder, he initially was a co-founder. The chairman and the CEO, and he was fine. He exited the business about 4 years ago, and then I got a chairman this next time. And it's okay. I'm not going to sit here and lie to you and say it's the biggest blessing on the earth, but it's something investors mandated. I've gone along with it, and he's added value in various parts of the business. For me, another lesson learned is that you can't perfect the business before an exit. You can do your very, very best and get it as shiny as possible. But as one of the panelists said, sometimes it's okay to have a bootstrap business, and that's exactly what ours was this first time around when we sought investment new investment in October 2015. It was less than 40 people. Our G&A budget was nothing. We were mandated to ride coach even in domestic trains, all kinds of things. I remember what mobile tariffs cost back then for the team. But when you find that investor who realizes there is something there and they've got a professional pedigree about them, it's a real opportunity when you find that partner to go for the explosive growth and to worry about the big things. For me, the big things are making sure as an upstart, as a disruptor, and I consider ourselves still an upstart and disruptor, that things never get stale. And so probably about 1.5 years ago, 2 years ago, and 2 of them are in the room today, I felt the business was getting stale, that the incumbent team members weren't thinking outside the box. And so I brought in 5 or 6 MBA students who were about 1 month to 3 months from finishing their studies. I brought them all the way out to Solihull. Most of you couldn't find it on a map if you tried, but it's near Birmingham. And I brought them in to disrupt the business and to cause change, to get people to think, and to really implement some greater intellectualism into the business. It wasn't because people weren't smart and passionate about what they were doing. They were just so busy doing their day job, they didn't have an opportunity to think about the future. And I think when you're in a business and you're worried about building it, and we always make the joke, which we didn't create, but we're building a plane while it's in the air. And you don't always have time to think of everything. You need more smart people to do that. And I think when you're in your first go, the first round of investment, and you're seeing that through, you're probably not going to get that chance, because those initial investors, they don't care. They don't care how limited and light you are on resources. Only you do. And so you got to fight passionately, even to hire a new administrative assistant or to replace someone that exited. You've got to fight tooth and nail for that. But when you find that next round of investors that are really about that exponential growth, the explosive growth that you all want, that you're passionate about in terms of building your business, those are the ones to seize upon, and they'll embrace things like bringing in additional team members who haven't proven themselves. And for me, embracing youth, embracing intellectualism, having it disrupt the business, introducing them to somebody they're going to work with, and giving neither party very much introduction whatsoever, you just leave them to it, and great things happen. I think that for us, we wake up every morning trying to take market share from the utilities. And the big six are huge competitors to us. And we try to take market share that they've held oftentimes for 10, 15 years and just do things better. We're like a scalpel, they're a sledgehammer. And the detail we give to things like operating expenses, to contracting things in a different way, I feel bad for them and I sympathize for them because, these are multi-thousand person utilities and companies, but they just struggle. It's like turning an oil tanker around. And we run circles around them because we put an additional layer of focus to things, and we bought a couple of different power plants off of them, and they just acknowledge, you know how to do this and we don't. And, we strive to secure 30 to 40% market share in any service, in any market we touch. That again has been 100%, not 90, not 95, not 99, 100% dominated by utilities. And we just go and, I'm not very well educated, so I can say colorful things, which is horrible for our PR people, but, we try to punch them in the mouth. And we see if they respond. And it's taken about 5 or 6 years, and you know what they've done? They've not innovated. They've not expressed a greater concern for the consumers. Sorry, I was going to say the lever, but that's not my language. The lever they pulled is to try to change the rules and regs, and to get that they want to level the playing field. They want to tilt the playing field towards themselves. But for us, we've got such scale now. We're an 823 megawatt business. There's a PowerPoint presentation that somebody's worked really hard on that I've not even touched. So it's just my name, which sounds pretty self-congratulatory, but. It's an 823 megawatt business. We're steamrolling towards a gigawatt. We built half a gig. EBITDA FY18 will be 40 million pounds. Next year, 50 million pounds. We're going to go out to market again. We're looking for an investor, one investor, please. One investor. We've got debt funding from HSBC, RBS. But we're growing the business every day by walking up to utilities and just taking it from them and seeing how they respond. Now they're changing the rules and regs, so what do you have to do? You have to continue to be flexible and nimble. But the beauty of it is, if you've gotten to a position like where we've gotten to in your industry, you're there, you can do it, and you've got to make sure you don't get stale. So it's going to require new people. It's going to require you to, as a founder, as a CEO, as a member of the executive team, as somebody who wants to take my job, you've got to always be the most ambitious person in the world. And so those are my parting thoughts. I appreciate you don't have any questions because I've probably offended, or somebody knows my private equity investors or my chairman. But if there's an innocuous question, I'll take it. But my word, there, I've done a slide. And I thought it was a fantastic agenda. I said, Jenny, we got to go to this thing. And she said, you're speaking at it. So I hope you all have enjoyed the conference as much as I enjoyed the panel. But I would just tell you, keep pushing. Don't let private equity investors keep you down. There's a phrase, if you look it up on Wikipedia, you won't know how to spell it, illegitimine non carborundum. It says, don't let the dirty bastards get you down. And so if you're running a business now, just run it harder. If you're investing in a business, bless you. leave the management team alone. Thanks.
Well, thank you for that ringing endorsement. I think we might have some innocuous questions once we've heard all three, if we may. Second up, by way of contrast, and hopefully a happier customer, is Mr. Roy Tuvey, a president and founder of Wandera.
Thank you very much. Thank you. He's shaking my hand, so I say good things. It's a pleasure to be here and a hard act to follow. First of all, oh, there we go. Someone did leave the clicker. So, quick introduction about myself. I started my career in the early days in corporate finance and private equity. In 1999, I set up a .com, and I've been a technology entrepreneur ever since then. It's been really interesting to see the different cycles in the industry, starting with the the tech nuclear winter in the early 2000s, and then now the recent emergence of the UK tech ecosystem. Each of the businesses that I co-founded provided a service that wasn't provided before, pioneered a new category. And they ended up, all of them actually ended up being global businesses. So I wanted to share some of the insights from that experience. So we're in the business of providing cybersecurity services to companies, from SMBs up to the largest global enterprise, which is our primary focus. We support all sorts of verticals, but key ones where they have very sensitive IP that they're determined to protect. Pharma, oil and gas, engineering, technology. But actually our primary vertical is financial and professional services. They have knowledge workers, very high dependency on the internet, very security conscious. In fact, the two headline sponsors today are customers, and we have over 150 financial sponsor customers just in London alone. Very early on, we recognized the power of the cloud. In '99, we were called an application service provider or a managed service provider, on-demand provider. Today, the category is called software as a service. And we've always been a true SaaS. So we developed a multi-tenant cloud proxy that was global and hosted across multiple data centers. In English, that means we're a middleman. We sit in the path of the data, in between a user and the internet. So if they're accessing Salesforce or they're accessing Amazon, that data comes via us. It's an incredibly powerful position to be in. We have real-time visibility into the data and the data flows. We're able to aggregate that and see a tremendous, very large data set in the billions of data requests every single day. And then we can apply cloud machine learning intelligence to try and identify what's called zero-day attacks. Attacks that haven't been seen before, for which there are no signatures, and for which antivirus is useless. And we've built that architecture and proven to be incredibly effective in identifying threats over the years. So our first company, ScanSafe, which we started in 2003 in cyber, focused on web security in the network, protecting company networks when users access the internet. It was a well-established market in the multi-billions that was dominated by very large global technology companies, Cisco, Intel, Symantec. And we were the first provider to offer a true cloud approach that didn't require any on-premises equipment, hardware or software, provided a superior total cost of ownership, and again, our cloud intelligence proved very effective in identifying threats. We scaled and built up that business. We were providing services to 3,000 enterprise customers globally. At our peak, we were processing 5 billion web requests every single day, and then in 2010, eventually we were acquired by Cisco for 200 million. Fast forward to our next business, Wandera, we applied all of that cloud expertise to the enterprise mobility use case. We recognized early that enterprise mobility is an incredible secular trend in the industry. It's an incredible productivity driver for businesses, but employees want access to data and applications instantaneously. The challenge is that introduces tremendous risk into the organization. The risk that one of your employee devices is hacked, that sensitive company data is compromised, and that operates as a link into the company network. Wandera is now a global organization. We have, again, I think now 500 enterprise customers. We sell through the global carriers, AT&T and Verizon in North America, BT and Deutsche Telekom, for example, across Europe. We're growing incredibly fast, 250% year on year, and we recently announced a $30 million fundraising to help fuel our global aspirations and global growth. So what are the key sort of 3 lessons that we've learned in trying to pioneer a new category and a new segment? The first is that timing is everything. It's almost just as bad to be too early to a market as it is to be too late. You can't build and overinvest too early, enthuse and motivate your team, and not sell anything. We recognized early in ScanSafe that viruses were going to transition from email to web, and we rode the wave. Just after we started our business, everyone started talking about spyware, and we managed to ride that wave very effectively. Similarly, we understood that the world was moving to mobile early. We were operating in the network side. We saw from our customers before our Cisco acquisition that people were moving increasingly to mobile. And it's really important that the trends are with you and not against you. In the early days in enterprise, it's very difficult to get customers to buy and to show a lot of customer traction. So what you need to be able to talk about are trends. And in our industry, it's always been positive trends. So last year, for example, there was a tipping point in mobility. More internet traffic is happening over mobile devices than from desktops and laptops. And when companies have invested a huge amount of resources in protecting their network infrastructure, it's very obvious to them, if over 50% of the traffic is happening on mobile, that they must do something, that they must act. And so operating in an industry where the trends are with you is very positive. You can talk about the trends initially and get the ball rolling. So timing is absolutely critical. The second key thing is the importance of vision and influence. It's really important to articulate a clear vision that you reiterate time and again. It needs to be bold, it needs to be aspirational, something that incentivizes early adopters in a market to work with you. They need to get excited to work with you. And you need to invest heavily in your thought leadership, heavily in trying to build relationships with key influencers in a market. So both of our companies were recognized as a cool vendor by Gartner. For those of you who don't know, in enterprise software, sort of nobody moves without the Gartner seal of approval. It was incredible to have that approval, to show that we're innovators, to show that we're pioneers, and to get that influencer community behind us. And similarly, the customers that you target. So one great customer is worth 10 others at the early stages. What's a great customer? So in ScanSafe, that was GE. GE was recognized as the most rigorous, they did the best due diligence, they had the most respected security organization. And when we could tell the market that GE bought our service, particularly at a time in the mid-2000s where there was increased reticence or early reticence to migrate to the cloud, it was a tremendous thing to be able to say to customers, if we pass GE's due diligence, surely it's good enough for you. Similarly with Wandera, we signed up the largest ever mobile security deployment. It's a big global technology company with 80,000 mobile devices. And you want to do one of those kind of key deals to get the market to sit up and take notice. Third and finally, there's been a lot of talk today from the early morning around the ambition of UK entrepreneurs to build big businesses. And if any of you have met me in the past, or my brother, who I co-founded these businesses with, you'll realize that one thing we're not short of is ambition, and we want to build big global businesses. The challenge that we have is, as a British company, when you go global, you start competing with American companies that have access to far more capital. They invest much more aggressively, they build up big cash burn, because they know that they have more capital available around the corner. We have to be capital efficient, try and show a path to profitability, if not profitability initially, and try and scale very aggressively. So that's the ultimate challenge for us as a business. How do we become a global leader without having the same resources as our US counterparts? But the other key challenge when you're pioneering a new category is you actually have to do two jobs really, really well. On the one hand, you have to educate the market and make sure that everybody gets really excited. And then what happens is you reach a tipping point where the market comes to you. And when it comes in big volume, and you need to then be prepared to execute on that opportunity. And I would say if there was one sort of learning from our last company that we could have done better is when the market finally came to us after we were pounding the street and telling everyone why everything needs to go to cloud, we weren't fast enough in investing and being really, really aggressive and doubling down to capture the full global market opportunity. With Wandera, we've now raised $50 million in total, and we hope to be able to properly invest behind the business. Our sort of mantra internally to the team is we don't want to be the MySpace, we want to be the Netflix or the Amazon. Pioneer the category and then gather all of the spoils at the end of the day. Thank you very much.
And finally, in this segment, it's a great pleasure to introduce Mr. Ben Pugh, founder and CEO of Farmdrop.
Yeah, thanks. Thanks very much, everybody, for listening to this short presentation about Farmdrop. Is there a clicker, Roy? Okay, no worries. And I'm going to quote you to begin with, actually, Roy, which is that timing is everything, and certainly that's been our experience at Farmdrop. So I'll tell you a bit about what it is. And you're all potentially customers, I'm happy to say. So I'm not just looking at you as prospective partners and or investors, but hopefully you'll get excited, as I am, about what the product does for consumers as well as local independent producers, and you might give it a try. The food system currently is broken, and this presentation is entitled Fixing the Food Chain. So what do I mean by it being broken? Here's a fact to get you started. Currently, in the UK, there are 8 times more free-range chickens sold than are produced. Exactly. So it is rife. We had horse meat from a few years ago, which happened around about the same time as me starting Farmdrop. And it was also around about the same time that I went out to Kent to see a local organic grower. He was selling butternut squash for £1 a unit into a supermarket, which is pretty much next door to where we're sitting. You can figure out which one it is as you walk out of here. They were selling the same butternut squash for £3. Growers getting £1, supermarket selling for £3. So £2, 2/3 of the retail value of the food is just disappearing into the ether of retailers and wholesalers. And my view about that was that in the internet era, when everyone's running around with mobile apps and smartphones, surely we can create a pipe with a farmer at one end using a smartphone with a Farmdrop app on it, and me, the customer, at the other end, and all I wanted was the convenience of Ocado and the provenance and food quality of a farmer's market. That's all I felt that I was entitled to demand in 2013, and so I started Farmdrop. All the other stuff that was out there available, things like farmers markets, things like box schemes, and local shops were either inconvenient or they were too expensive. I just couldn't find anywhere anybody who was solving this problem in terms of the convenience and the quality and the provenance. And so we began on our mission. Our mission is to fix the food chain, and that's across healthier food and tastier food being more accessible. And we also care very deeply about the environment. My father was an environmental barrister, so I grew up in a household where there were constantly battles going on between farmers who'd been given a really rough time by big chemicals factories and things like that. And it's actually served us extremely well at Farmdrop, because everybody who's come to join the company, to work there, to distribute their food through Farmdrop, indeed to actually buy the food as a customer, they are in some way connected to the mission, i.e. they want to support local independent producers. They want to feed their families in a way that is actually kind to the environment, unlike the mainstream chain. And that's really in the hearts of the business and the people that we partner with. In the minds, we are outright efficiency junkies. The office, of which there are about 60 of us, is full of logisticians who've come across from the likes of Asda and M&S, and it's full of software engineers who are all trying to build amazing technology which will completely desecrate the cost of moving fresh food between producers and customers. And that's what we've basically done. Right now, I'm very pleased to say that we're positive in terms of we're profitable at basket level. We make money out of every basket of shopping that we sell. And the variable hub and delivery cost that we incur moving a basket of food through our supply chain is close to half of what Ocado incur, we think. Why? Well, I'll explain how it works, and then it will become clear. So for producers, we believe Farmdrop is the best ever way of distributing food in terms of convenience and also in terms of share of retail price. And they've had a really horrible 5 or 6 decades of just getting pummeled by the supermarkets. For customers, it's the freshest ever food with incredible convenience. The way that we will avoid the pitfalls of, as we scale, which we are at the moment, falling into the same trap of just selling lots of industrially produced food at huge scale, is that when we go to a new city and we're urban only, we set up a little hub the size of a couple of tennis courts, And it's local farmers to Bristol, if that's where the hub is, or to Manchester or to Edinburgh, that feed in to that hub. And by doing so, we're always finding a platform for the good guys, as we call them, i.e. the local, smaller scale indie producers, who, by the way, make the best food, the food that keeps my 3-year-old boy out of the GPs. He's never had an antibiotic, I think because he's grown up on Farmdrop food. We will always protect that USP, however large we get. And that's very important to us. Timing is everything. To go back to your point, absolutely. We're not trying to fight any trends here. We believe that the two trends that are really behind us is a growing interest in food provenance. People care where it's coming from. People understand increasingly the relationship between what they eat and how they feel. But we're all completely addicted to convenience now. So let's not shy away from that. Actually, let's create a product which is even more convenient. It's 1 hour time slot, next day delivery, than the guys that we're trying to disrupt. We do believe this is a major disruption opportunity. The market, broadly speaking, is about 200 billion. In the UK alone, that is, which is 4 times the size of global gaming, roughly. So I only need about 20 basis points of that, I think, to create a circa £1 billion of equity value. And I'm not trying to go and pull people out of Asda and Tesco's initially. I'm trying to pull them out of the places where you'd expect. Our customers, generally speaking, probably are already reading broadsheets and they've got a bit of an idea of what this is about, and that's fine too. But here's the really important point. Producers take 75% of the retail price. And we, because we're using mobile apps and electric vans and incur such a small fraction of the cost of our competitors, we can actually make money out of a tiny gross margin. We're the smallest gross margin retailer out there, and yet we absolutely believe we're going to be the most profitable. In terms of how it works, as a customer, you'd go onto the app. I would suggest that's the best way, but there's desktop and mobile sites, etc. You order your food, and real time, all of your orders get sent to 80 or so local producers dotted around London. They then have roughly 16 hours to get the food harvested and ready and actually brought into our hub, which is the prototypes currently in southeast London. And we've got our fleet of leased electric vans there. Everything gets reboxed and sent straight into customers' homes, where we lovingly unpack the shopping, take away all the packaging, because actually these are the things that are really important to our customers, because this is about being kinder to the environment, and that's what we think is fixing the food chain. Every single bag of spinach that would come into our hub, or a loaf of sourdough or fresh pasta, it's already been sold to an actual customer. So it's zero waste and it's zero storage, which again just helps us save money and take all the cost out of the supply chain. Who's it for? Well, this is a picture of an actual customer. It's quite an old slide. She's been with us for a couple of years now, and I'm pleased to say that every month she shops with us more. We've been tweaking the range. When I started Farmdrop, you could only buy 2 products. There was a medium veg box and a large veg box. And I had 6 customers, because guess what? That doesn't solve a problem for anybody. If you want to solve a problem for somebody, actually, you give them an environmentally friendly dishwasher tablet alongside all your amazing local eggs and bread and dairy. And because everything gravitates around the same core value around fixing the food chain, you only need to sell 1 dishwasher tablet. And in that way, we keep a really tight range, but one that is very, very relevant to our customers. I'm pleased to say are very happy with it. I'm also pleased to say that there are thousands of customers like Charlie. We've raised a bit over £10 million in our history. We are unit economics obsessed, which is why I come back to this idea of being profitable at basket level. We are obsessed with customer retention. So we're looking at data all the time to actually make sure we are doing the right things with the product. And we're going to be opening our second hub in Bristol in less than 2 months' time, because we're now just enjoying that period of very positive unit economics, great retention, which is improving as well. And so, yeah, that's Farmdrop. Thank you very much for listening to me give you a quick rundown of what it is. Look forward to questions.
Right. Those are 3 fantastic, fascinating presentations. Are there any comments, observations, questions, abuse that you'd like to direct at any or all of these 3 gentlemen? Oh, come on, there must be. Ah, up there. The microphone's coming towards you, sir.
Hey, thanks guys for some very good and very informative talks there. Just a quick question for the last one. With Amazon buying Whole Foods this week, how are you protecting yourself with larger distribution networks coming to the market?
Yeah, great question, and one that won't surprise you to ask, to hear that a few other people, including a few shareholders, have been asking. It was actually a Whole Foods. That's the supermarket around the corner where I first went into. And so we make it our job to have a really good idea of our producers and how they overlap with the producers feeding into the larger supply chains, the supermarkets, the Amazon Freshes and the Whole Foods and so forth. And the reality is there's minimal overlap. And the reason for that is that the producers that we serve, and they really are as important to us as our customers, they're the guys that you will currently go and find at a farmer's market or doing their own box scheme. The guys that are feeding into the bigger players are operating on an industrial scale, and actually it's not their food that we're trying to make a market for. So there's very minimal overlap, point number one. Point number two, that could very easily change when an 800-pound gorilla suddenly, crawls into your ring with you. Then you have to take that incredibly seriously, and that acquisition was a very big deal. So we can only expect them to become much more aggressive. And again, it comes back to how we're already interacting with producers. So we already know that they're giving around half of the share of retail price as Farmdrop, and that's via the Amazon Fresh route. So I just don't think they're thinking about it in the same way as us in terms of really look after your producers, and that way you secure the best inventory, which is what keeps your customers. The other thing that's important to say is that there is a finite supply of organic growers and smaller scale dairies, and so I do fully expect us, and I said this to the team on Friday when the news broke. We've got to be incredibly ambitious, incredibly aggressive, and actually get out there and make sure we can make a market for all these incredible producers before anybody else does.
Splendid. One more question, comment. Otherwise, certainly this gentleman down here. Again, the microphone wheeling its way towards you.
Hi, it's a question to Tim from UKPR. Hi, Tim. I guess in the world that we live in, how do you set up your business to deal with the unexpected, especially in your environment with the constant regulatory change, and how do you prepare your team for that?
Well, I think first of all, you reassure the team that change is ever present and that the regulatory regime will continue to evolve. And so, just today there was a decision that we had expected for about a year that came true, and it's a matter of reassuring the team that we're on the right path, that the only obstacle to our growth is ourselves. And I think that the best thing you can do is just to build a team that can deal with these surprises. And it goes back to the point about embrace change and eschew the status quo. And if you want to be disrupted, then your team has to be prepared to be disrupted itself.